what they don't tell you about the housing market crash. There has been a lot of predictions about how the housing market crash will happen, how many years will it take, when will home prices finally fall. In today's video, we're going to look back at history and see the different patterns that were given or were associated with the housing market crash and apply it to this slowdown in the economy, especially in the housing market. One of the biggest indicators to gauge where the housing market is at is looking at home prices, and that's what we're going to do. But before we go there, please be sure to subscribe to this channel for some more content around the housing market, personal finance, and the economy as a whole. All right, so I'm looking at the S&P Case-Shiller U.S. National Home Price Index. So here, this is showing just the change in home prices within the past couple of years in the housing industry, in the housing market. Let's look back at what happened in 08, 09. And so prices reached its peak towards the end of 2006, beginning of 2007. Let's just say here, January 2007, the price index was at 182.719. And so everything really happened in 08, 09 with different things happening, like banks collapsing, the government having to bail out the different auto manufacturers, banking institution, and other sectors of the economy. During that time, a lot of things went down. Home prices went down, as we're seeing right here. And we're seeing just changes happening in this market. And so its peak was around 182, and then it was at its lowest or around its lowest around January, February of 2012. All right, and it was around 134. And so one thing I want to show is just that its peak to its trough, its highest point to its lowest point. And so it took a total of about 5 years in order for home prices to reach its bottom. The reason why I'm saying that is because a lot of people are saying that, hey, the housing market, it's going to just dip this year and that's it. Or they're trying to gauge when home prices will bottom out. When last recession, as we just saw, took like 5 years for home prices to bottom. And so I think for us, we have to look at that and understand that, okay, it may take a couple of years until home prices fall. Am I going to wait 5 years until I buy my first rental property? Am I going to wait 5 years until I buy my home? I say, hey, if something fits in your budget right now, buy it, right? Yes, you can get a lower price maybe next year or later this year, but you never know. You're trying to catch a falling knife, as they say, right? Trying to gauge when the bottom's going to be. And so I think that's one thing that's missing from these different news outlets of people just talking about, oh, when will home prices decrease, or should you wait till you buy a home or not? Like, are you willing to wait 5 years to buy a home? And so you could see we're just reaching our slowdown in the economy. So we reached our peak in the summer of last year. The price index was at 308. Right now we're at 294, and it's been about 6 to 7 months so far. And so will this be very similar to 08, where it's going to take a couple of years until we reach our bottom? Maybe at not as long as 5 years, but it may reach up until that point. So we never know. Another thing that I want to share with you all is just looking when home prices started to rebound, right? Because I think that's very important to look at also, because yes, there's a bottom, but there's also an increase in everything. So we reached the bottom January 2012. And so we're trying to reach back at its peak around over 180. Its bottom was in 2012, and it reached over 180 in 2016. So it took another 4 years to even reach back to 2006 levels. We could say it took 5 years to go reach its bottom, and then 4 years to reach back to the point of 06, 07. So if it follows that same trajectory as it did in 08, 09, we can see that playing out. Let's, for example, just use these exact same term lengths. So 5 years to go completely down. So let's say our peak was June of 2022. Then we'll probably reach our home price index, our bottom, in 5 years so in 2027, summer of 2027, you can expect home prices bottoming. And then to reach it back to 2022 levels, that's another 4 years. 2031 is when we'll reach back to our levels. Looking back at this chart, you see from 2006 essentially back to 2016, it took a total of 10 years from it to reach its peak, its bottom, and go back to its level. A total of 10 years. And so if that's the same trajectory that we're expecting to face, then we're in it for a long run, right? Because that's essentially mean 2032 is when we'll reach back to these levels that we reached in 2022. However, I do not see that happening because this is so much different than it was back in '08. As we know, there are stricter laws around borrowing, around mortgage rates, and different things like that. And people's incomes are increasing. And it is going up. Actually, people are making more than what they did back in the day. And so another thing that I want to show was, I know this is not completely directed to the housing market, but it shows the fastest correction in the S&P 500 on record. So time taken for the S&P 500 to correct 10% from peak, right? And so back in the 80s, it took like over 180 days. And you see the closer that we get to today's date, that time has been decreasing, right? Now, back in February 2020, when the market did crash a little bit, it took less than 20 days to rebound. And so I see that happening in the housing market. It's not going to be as long as it was back in '08 and '07, right? I think it's going to be a shorter time to rebound for sure. Maybe it's 2 years to hit its bottom or 3 years to hit its bottom as opposed to 5 or 6 years. But it is going to take a couple of years till we reach back to the levels of 2022, right? And so I think, yeah, it is going to take longer than usual, but I mean, it's not going to take longer as usual, but it is going to take a good amount of time. The other thing I want to show is just looking at the interest rates, because interest rates were actually similar rates than what is at right now. 08-09 recession above 6%, right? In the 5s and the 4s, but that was in '09, 2010. And so you could see back below like around 3%, and it was around 2012. Also, that was around the bottom of the housing market with home prices. And so probably the next time you see interest rates below 4% will be a couple of years. So we had to be used to being above 5% for the next couple of years with interest rates. All right, you all, let me know what you all think about this. Do you think home prices will rebound way much faster than what it did back in '08 and other recessions? Or do you think it is going to be a long drawn out process that total is going to take like 10 years or more in order for us to reach back to these elevated prices of 2012? And I know there are different factors contributing to everything that was happening. First of all, we had super low interest rates that we're probably not going to experience in another 10, 20 years. And on top of that, there are a lot of people who are rightly so in their mortgage because they have good credit, they have good income, and people are sitting still on a ton of equity on their properties. Now, we did see a hint of what happened in '08 happening a week ago with the bank collapse of Silicon Valley Bank, with mortgage rates and interest rates affecting them holding bonds and things of that nature. And so if we follow a same trajectory as we did in '08, then yeah, we have some time until we really reach affordability, first of all, and then until we rebound from reaching the housing market bottom. All right, you all, let me know your thoughts down below, and I'll talk to you all later.